What's up, Financial Hogs? This is Eric. In today's video, I wanted to go over this article on how to pay off your credit card debt in 2022. This is 5 ways to do it. I haven't read everything on this. I kind of just saw the title and thought this would be good to talk about. So let's go ahead and get in it. The first way is the debt avalanche method. All right, now I'm intrigued too. We're going to see some of the ways I've talked about helping out debt. I wonder will we be seeing this in this. So number one, the debt avalanche method. Okay, so looking at your debt in its entirety, we recommend approaching it bit by bit. By breaking your debt down into manageable chunks, you'll experience quicker wins and stay motivated. Two popular ways to break down debt repayments are the debt avalanche and the debt snowball. Using the debt avalanche method, you'll order your credit card debts from the highest interest rate to the lowest. You'll make the minimum payment on each of your credit card accounts, and any extra income you have will go towards the higher interest card. Eventually, that card will be paid off and you won't have to worry about that monthly payment anymore. Okay, cool. And then from there, you'll just go to the next highest interest and you'll continue going down. Now, this is a good method, I'm not going to lie. However, I don't recommend this method for most people, just for the fact that if you are already in like a lot of debt, you probably don't have the longest, I guess, experience with good credit management. So this one may be harder to get around. I guess technically speaking, going with your highest interest rate first and then going down from there, you will save a bit more down the line. I get especially depending on how much your interests are on your different debts. But you probably, at least when I've been seeing a lot online, a lot of people don't continue with the debt avalanche method. It's like a very small percentage of people who can actually continue this. And a lot of these people are already financially literate. So the second one, this is one I definitely recommend, the debt snowball method. And it's saying, I'll just read what they're saying here. With the debt snowball method, you'll order your debts from the lowest balance to the highest, regardless of the interest rate on the cards. You'll make the minimum payment on each of your credit card balances, and any extra income will go to the credit card with the smallest balance. Starting with the smallest balance allows you to experience wins faster than you would with the avalanche. This method is ideal for people who are motivated by quick wins, but it has a downside. Those who choose it could end up paying more interest over the long term. But again, people are thinking that reading this, they're not thinking about people actually just giving up. A lot of people just give up on paying debt. I really agree with going with the debt snowball for most people, because again, you're getting small challenges, kind of like playing like a video game. Like, you're starting out low, you're working your way up. You start on level 1, and then you beat level 1, you go to level 2, then you go to level 2, you go to level 3. Then from level 3, go to level 4. Now, some people can just go right to level 5, right to level 6, right to level 7, and not be as mad at the game or at the bosses at that level. Well, a lot of people can't. A lot of people just need to go through the steps. And with this death snowball, I think that is something that a lot of people can use, and something that I've also used as well. Just starting low, starting small, getting that first win, getting your confidence up, and continuing that, because that's definitely a big thing too. We're paying off your debt, keeping that confidence that you can keep on paying it off and not giving up. Now, the third way they're saying, okay, this is a good one too, the balance transfer. Now, if you have good to excellent credit, typically a FICO score of 670 or above, and can feasibly pay off your debt within a year, a balance transfer credit card is a great option. Balance transfer cards can save you money on interest charges by letting you transfer the balance of a card with a higher interest rate to a card with 0%. And then, most of the cards offer 0% for 12 to 18 months with no annual fee. They generally have a 2 to 5% balance transfer fee, but you can easily find balance transfer cards with no fee. I'm pretty sure I talked about some of this balance transfer in some of my credit card videos, so definitely check that out if you guys haven't already. But yeah, balance transfers, those are pretty straight. A lot of the credit cards I talked about too, I believe did have 0% interest. for your balance transfer as well. So definitely check out those videos on the channel. It should be on my home page. So yeah, balance transfer, that's pretty cool, pretty straight. You will still then have to, pay it out, but at least you'll have a year, maybe even 18 months of no interest. I love having that. Now, number 4, check out a loan. Okay, I'm intrigued. Let's see. You may look at getting a loan to consolidate and refinance your debts. If you get a loan with a lower interest rate and pay off your credit cards, that lower rate could potentially save you thousands of dollars in interest. This is realistic to pay off your credit card debt if you currently have little or no money to put forward. Let's look at 2 options for debt consolidation. All right, you got personal loans, and then they're kind of just talking about online marketplaces will allow you to pre-qualify for a personal loan without doing a hard inquiry, and then home equity loan. Okay, if you own a home with equity, you have 3 ways to borrow money against your value of your home. With a home equity loan, the lender gives you your money all at once, and you repay it at a fixed interest rate over a set period of time. With a home equity line of credit, you're giving a limit to borrow. Within that limit, you could take as little or as much as you need whenever you want. And with a cash out refinance, you refinance your first mortgage with a mortgage that's slightly more money than your current one and pocket the difference. For homeowners, these options will most likely offer the lowest interest rates, but they've also the riskiest because your home is the collateral, something you own that your lender can take if you don't pay off your loan. All right. So I don't really talk about getting loans to pay off your debt. To be honest with you on the channel, at least not yet. Maybe this is something I might have to look into some more. But I do like how they have the personal loan, and also the home equity loan. If you don't own a home, I guess you really can't do the home equity. So you had to go towards the personal loan. Again, if you go into online marketplaces, they're saying you can find some with not as much interest. That's definitely a lot better than the ones that we see like on the streets. I just did a video on it. I forgot the freaking name of what you call those, but they generally be more towards hoods or lower economic areas, and they charge you like 100%, 200%, 3%, 300% interest on how much you get back from that loan. But I am liking that home equity somewhat. Again, it depending on how much I guess you're in debt, and making sure that you have some form of income to pay that back. I don't want you guys to lose your home. But if you do it smartly, I have heard people using their home equity very well, and we're able to use that for, I guess, a business collateral, and was able to make that happen. So yeah, for home equity, I would definitely try to have a plan. I wanted you to go into it, but that's just me right now. I'll probably look into it more, but I have seen a lot of people actually use their home equity, especially when the prices of all the houses and everything went up, and was able to make bank. So yeah, that's another way. And then lastly, debt settlement. All right, now the world of debt collections and creditors can be confusing, intimidating, and sometimes even illegal. Oh man. There's a common misconception, for example, that someone can take your house, or you can go to jail for not making your credit card payments. But credit card debt is unsecured debt, meaning no one can put you in jail or take your house if you don't pay. Now, if you're being harassed by creditors or have circumstances that make your debt repayment confusing, don't give up before finding out your options for assistance. And then you got your debt management program. And they're saying with this, a credit counseling company will handle your consolidation in hopes of getting you a better interest rate and lower fees. You will be assigned a counselor who will set up a repayment and education plan for you. This program is specifically for unsecured debt like credit cards and medical bills. And then we got credit card debt settlement. If you're in more than just a temporary season of financial instability and you can't see yourself affording the amount of credit card debt you owe, debt settlement is an option, though we regard it as the last resort. Debt settlement reduces the amount of debt you owe, but it will significantly lower your credit score and negatively impact your credit report. The process isn't as simple as debt consolidation. You have to convince every creditor that if they don't settle with you, they probably won't get anything at all. So of course, during that time, you won't be making any payments while interest and late fees occur. And let's look at the pro tip. Be careful when seeking help with debt settlement. While some companies are legitimately there to assist you, others take your money and do very little to help your situation. And yeah, bankruptcy as well. I was just thinking that. And yeah, bankruptcy is another last resort. The two major types for individuals are chapter 7 and chapter 13. We won't just go over everything on this, but bankruptcy is another thing you can do as well. And then they're kind of going over how to pay off your credit card debt fast, up your monthly payments, try to get a lower rate, get the debt reduced, and how much will paying off your credit cards raise your score. Okay, cool. So yeah, I think overall, they are giving some pretty good facts or different ways, you guys can help consolidate your credit. Hopefully if you're watching the channel, hopefully you're not in the 3, 4, and 5 range. Hopefully you're making enough right now, or applying yourself either in another business, working for somebody else. I mean, like working for like another company with a higher pay, on some specialized skills. Right now I've been doing a whole lot of studying on my cybersecurity, so that kind of been messing me around on some of the videos, but coming back for you guys. Oh my god, I don't know who the freak is in the freaking back right now. Everybody want to walk in the alleyway right now while I'm doing a video. But yeah, hopefully you guys again in the 1 or 2. If not, if you guys do need different ways to make money, I have done some videos very recently on different ways you can make money on the weekends, make money on social media like Instagram, how to start a business, etc. So I definitely recommend that to you guys. Also too, I have like the Sunday side hustle, so definitely check out that series as well if you're trying to look at some other side hustles you can do on the side to make some extra money during the weekends. And I will see you guys in the next video. Peace.